Welcome to this very special coverage on the HDFC AMC listing. It's the largest equity manager in the country, and its own discovery prize has put a smile on the faces of almost all investors. The counter will register its first stake in a few minutes from now, making it only the second pure play asset management company to be listed on the bourses. It's an interesting take. With me to take us through the next whatever number of minutes that we cover this, Navneet Saluja and Soumit Sarkar, my colleagues, and of course a battery of experts join in as well in moments from now. Santosh Singh, the head of research at Haitong, already with us, and someone who manages an asset management company house himself, Sunil Subramani of Sundar MMF, who will be with us shortly. But Navneet, interesting day of trade, and everybody was thinking about 1500, 1550. Boy, we are in for a positive surprise.
I don't know if there's going to be a smile on everyone's face, because I knew a lot of people who were not allotted shares, Neeraj, and they were looking forward to buy at the opening. But if it opens somewhere about 1700, I think the valuations will be northwards of 50 times non-trailing FY18 basis. So let's see. As of now, the discovery price is showing somewhere about 1700. But Soumit, the valuations will be sky high at these levels.
Yes, the price to earnings for FY18 comes to around 51.1 times, price to book is 17.1 times, and market cap as a percentage of FY18 AUM is 12.4 times. That is nearly 3 times that of Reliance Nippon, which is now trading at close to 4.2 times. And Reliance Nippon P is close to 32, so it's expensive in all three metrics if you see price to earnings, price to book, and market cap as a percentage of AUM.
Neeraj, you've been highlighting last 2 days how Reliance Nippon has been moving higher, in anticipation of how bumper listing it could be. So let's see, that stock's also been moving up in the last 2 sessions.
Yeah, it's been interesting. Santosh has been very bullish on HDFC AMC. Soumit has a few pertinent thoughts here, Santosh. 40 seconds to the listing, but a quick thought here. At 1750, is it finally looking expensive?
See,
you don't have to say yes.
I would not say that you will be able to make money in the near term. That's what I can say, that you won't be able to make money in the near term. If you can now, from here on, you can only make money if you play it through the cycle. Because for the near term, almost all the upside, trading at, on my numbers, trading at around 31, 32 times FY20 earnings, almost all the upside has been taken care of.
Santosh, very quickly, would you ask people to buy at 1700?
As I'm saying, if you are looking for 6 months, making money in 6 months, no.
Okay. Well, so that's a pertinent question, and I'm sure we'll ask this question 3 other times. But here's the listing price of HDFC AMC, and the management will ring that gong. Okay, that's of course the management ringing the gong. Milind Barve, Prashant Jain, and Deepak Parekh himself. And let's get the first stick out here, 1753. That's 60% on listing, making it only the 7th company in the last 2.5 years to have 50% premium. If this lasts, by the way, 60% now, 1765, 1768, market cap of 37,600 crores for HDFC AMC. That's big. Let's just get that quick comparison of HDFC AMC to RNAM as well. One on the market cap, and look at the staggering difference there. 1793 now for HDFC AMC, 38,000 crores of market cap. 16,000 crores for Reliance Nippon Asset Management, which also has seen a bit of a leg up. I mean, the comparisons will go on, but this is really big. Soumit, taken everybody by surprise, isn't it?
Yes, it has. The street was expecting a premium of only 600 rupees, but then it's more than that, way more than that. It's actually nearing 1800 mark now.
And the HNIs are making money because they had taken leverage bets. So because of that, street was betting on 40 to 45%. But I think they'll also be happy looking at the number of almost 1800 now.
Santosh, initial thoughts, 1792. This is staggering stuff. We'll get to some other comparisons as well in a bit. But 1792, 38,000 crores of market cap, way higher than Reliance Nippon. I know you made that point that Reliance Nippon AUM has some pension assets as well, but that notwithstanding, this is a big premium, over 1800 now.
Yeah, means you can say it's trading at almost 55-60% premium to Reliance Nippon on price to earnings. So that's definitely the case. But one of the points which we keep making to the clients also, that HDFC name versus Reliance name, Reliance HDFC generally trades at some big premium. So the question is that at these valuations, what to do? So as I said, my valuation of the company, which our last put out valuation is around 35,000 crores. So it has crossed our valuation, which was almost like 30-35% premium to where the stock was being offered. So I think it has crossed our valuation, and that's why I'm saying then the near term, to me, it will be difficult to make money. Yes, longer term, if one can hold through the cycle 5 years, yes, there is a possibility.
So you're bullish on AMC business, Santosh?
So see, it's a cyclical business per se.
For sure. Would you go for Reliance Nippon then now?
Yeah, so it's a cyclical business, and see, there will be ups and downs. That's definitely for sure. So we are bullish over the cycle. We are not bullish if one. Again, I'm saying that AMC is not a business where you want to make money in 6 months. If you want to make money in 6 months, stay away from AMC business.
Would you still advise investors to shift their focus from Reliance Nippon to HDFC AMC right now?
Not really at these prices.
And if ICICI AMC comes with an IPO then?
So ICICI and HDFC, if you look at these two companies, on almost every parameter they are similar. Okay, profitability, every parameter they are similar. The only difference between ICICI and HDFC is that ICICI net worth is much lower than HDFC, and that's why the profits look slower. But on a normalized basis, almost they are similar in all parameters. The only difference will be an ICICI name versus an HDFC name. That will be the only difference, and a lot of institutions really want to be in HDFC name, so there will be a premium. But otherwise, they're almost similar companies.
Yeah, it's very interesting, guys. Let's look at that comparison that Sumit and Santosh and Navneet have been talking about, the market cap to AUM valuation comparison. One of the comparisons, I know different people would have different metrics out here, but this is the market cap as a percentage of AUM, 12.5% for HDFC versus 4% for Reliance Nippon Asset Management. Santosh is very clear. He's not telling people to log out of HDFC and put that money into Reliance Nippon, but may not be prudent to buy HDFC currently, right, Santosh? Yeah. May be prudent to buy Reliance Nippon. Definitely. Or would you then go for some of the clubbed names, which Motilal Oswal has an AMC, IIFL Holdings now has a prominent name backing it, in its fold and looking to become big in the AMC business as well. Would you look to do that piece?
No, I would say that at these valuations, I would rather go for RNM because the proxies generally don't work in India. The proxies work only for a few days after the listing. After that, proxies don't work.
Okay, very interesting. Navneet, take a guess as to what's the quantum of money, Sumit, Navneet, that some of the individual shareholders or the office bearers of HDFC have made. The numbers would have really jumped up in trade. I think that played too.
Yes, I think we were betting that retail investors who would have been allotted one lot of 13 shares would make somewhere about 5-6. I think it's way above that. And just, for the benefit of our viewers, let me tell you, on trailing basis, Reliance Nippon is 30 times. And Sumit just told me HDFC is now at 52 or 53 times. So for sure, there's a huge valuation gap. But Santosh, how much weightage do you ascribe to this parameter of market cap as a percentage of AUM, considering HDFC's maximum weightage is on the equity side?
See, we only look at price to earnings. Market cap as a percentage to AUM doesn't matter because you can manage a lot of liquid funds and don't make any money. So for us, it doesn't matter. So that's where I was saying that Reliance has almost like, so Reliance AUM is more than HDFC, but there are a huge amount of pension assets there and a lot of ETF assets there which are not earning money. So the earning assets are much lower than HDFC. So that's why what we look at is PE ratio rather than anything else.
One thing that I noticed for HDFC AMC, ICICI Prudential AMC and for Reliance. Now HDFC AMC's revenue and net profit as a percentage of AUM, now that have declined over FY14 to FY18. But that of Reliance AMC and ICICI AMC have remained stable over that same period or have increased. What would you attribute that to?
See, there are a couple of factors which are playing out now. The one was that there was definitely IPRU, if you look at 3 years back, IPRU if you look at today. There's a vast differential. IPRU used to be the number 3 or number 4 player in the AMC space just around 3 years back. Now it is the largest player in India. So the operating leverage has played out quite a lot in those two companies. But the question is, from here on, would there be a huge amount of operating leverage available? I don't think the industry per se has any operating leverage now available. There would be 1 or 2 basis points of operating leverage, but not much of operating leverage in the top 3-4 companies. Again, the bottom ones, if they can do an ICICI Pro, there can be a profitability jump. So that's the reason why you see ICICI and Reliance as a percentage of AUM, the profitability not declining, whereas HDFC, it has remained stable.
Okay, Reliance Nippon has corrected 2%. Let me tell our viewers the issue price of this IPO was 252. Stay on with us, Santosh. We've also got Sunil Subramaniam, MD and CEO of Sundaram Mutual Fund. Hi, Sunil. Good morning, and appreciate you joining us this morning on an historic day. Markets are all-time high. It's a bumper listing for HDFC AMC. First, a word on this listing, and second, your thoughts on the AMC business in India.
I think the listing reflects the future potential. I think I saw a lot of discussion around trailing P's and how it compares to competitors. I think, but the key element here, I think, is that one is that the growth in the Indian asset management industry is what is being factored in here. And you talked about percentage of GDP. Actually, if you see mutual funds today in India are only at 12% of GDP, whereas it's close to 50 to 60% in other countries. Second, even mutual funds as a percentage of market cap, India is among the lowest. So the scope for the industry to grow, and I think one of the key things with this particular player, he's got a captive distribution through the bank, and that's something which is something which, you know, as you go forward, when you own a client and then you're going a complete solution. Because one of the things that the industry is expecting, you know, AMCs are associated with mutual funds, but AMCs don't do only mutual funds. AMCs do portfolio management services, AMCs do alternative investment funds. And the HNI segment is usually untapped, because if you see the top 137,000 HNIs, ultra HNIs in the country, their wealth, potential wealth is 138 lakh crore, but the top 10 wealth management firms AUM is less than 7 lakh crore. So hardly 20% of HNIs are taking advice from financial consultants and investing in the equity markets. So I would say that with a back integration into the distribution side, also in the hand, I think companies which have the control over the total customer right from end to end are the ones which are going to take maximum, and I think that's reflected. So from the perspective, I would say that this is the forward PE that you need to look at. The trailing PE is irrelevant. The mutual fund industry's growth, just to give you a perspective on that, I don't know how many people remember this, April 2004 to 2014 of April, 10 years, the industry got 86,000 crores of inflows in all. But I'll tell you, just since Mr. Modi came to power from May 2020 today, 4.1 lakh crore has come in. That's almost 5x, 4.8x of the number. So the phenomenal growth, and just SIP book, 86,000 crores over 10 years. Today's SIP run rate at 7,500 crores a month is 90,000 crores. So I think that if you look at the growth, this is probably the fastest growing industry in the country. And the way to look at it is the PEG ratio and not the PE ratio. You've got to look at the growth that the industry has got lined up. And so the PE, as factoring in the growth in the future, I think will definitely be justified by the pricing.
Hello, Sunil. Soumit here. I just wanted to know about the SIP trend that we have been seeing. Are we seeing more SIPs coming from the tier 2 and tier 3 cities as compared to the tier 1 cities?
No, absolutely. See, because the SIPs are primarily driven by the distribution committee, of which the IFAs are a big part. And what the IFAs have been doing, that with the drop in inflation and the financialization of assets, that physical assets are going into the financial assets, the IFA segment has been pitching SIPs as a better method to enter the market to the semi-urban and rural. And, you know, with the increased pay commission, you know, the pay commission is generally treated as an urban phenomenon. But actually speaking, right, 53% of public sector and government employees work in semi-urban and rural area. So the SIP, those who earn money monthly, it makes sense for them to invest monthly. So SIP, I would in fact term it as a savings EMI. And I think the distribution committee needs to be applauded, that the way they have this time, you know, in 2006-07, when you saw the previous boom in the stock market, a huge amount of NFOs came in and took money and lump sum was invested. This time around, the distribution committee and the asset management company have, I think, sensibly taken customers' money over a period. And I'll tell you a statistic, 63% of SIPs are in excess of 5 years. So people who are coming in are not doing 1 year SIPs and 2 years just to time the market, but are looking at this as a long-term, you know, goal-based wealth creation tool. And I think that is a thing which is going to only help the industry grow even faster in the future.
And given the volatile market, do you expect SIPs into equity funds to increase going forward? Because that is the high margin business, I believe.
Absolutely, because you see, December to now, when you have seen the correction in the small cap and mid cap indices, in December, the SIP book was 6,500 crores. Today, it is 7,500 crores. Every market pundits were saying that 1 year SIPs are showing negative returns, so people will panic. And I saw a lot of media headlines on that. But what's happened on the ground level, there's been a 15% rise in the SIP book from December to June. So I think that's a clear-cut indication that the SIPs have been sold well as a volatility management tool, and customers are buying into that. So the greater the volatility, the more they are willing to go and now put in SIPs. I think that's a maturing of the Indian industry clearly showing up, and I think that augurs well for the future.
Okay, well, the shares of HDFC AMC are currently trading above the mark of 1800. Clearly, you're seeing some selling pressure coming in for Reliance Nippon. Santosh, you made a very pertinent point. It's a cyclical industry. FD rates are lower, yields on gold are probably, the rentals on real estate are on the lower side, and equity markets are at all-time high. So the money is pumping in. The point which Sunil was also making post, BJP came into power. I would say money came in more post demonetization. Still, you're seeing SIP of nearly 7,000 crore per month. So now at these higher valuations, would you also take a bet if I were to give you a choice between the other companies like Motilal, Edelweiss? I know they are not pure play AMC play, but compared to where the valuations are high, where would you put your money now when the markets are at all-time high?
So if you're asking me that compared to the asset management company, where would I put my money?
I'm not comparing them like totally, but because these are the companies where you ascribe higher valuations when markets are at all-time high.
Yes, so just to put in just an interesting point here, that 2008 when the first deal in, or one of the largest deal in the AMC industry happened, that happened somewhere around 13% or 14% of the AUM. And that was Reliance Nippon, where there was some, so definitely at the peak of the market, everything looks great, and that's where, although the industry would have changed slightly because of the SIPs, but at the same point in time, the investor behavior tends to be similar if the market were to fall like that. So if the valuations remain this high, definitely I would go for some of these NBFCs which you are pointing out within the financial space, some of the NBFCs, some of the banks which have not done well. So I would go in that direction.
So what do you think? It could be higher on that side?
Yeah, means, as I'm saying, that HDFC AMC per se is not a bad bet if you're looking for 5 years. But if you're a very
any company player, coming from HDFC stable is a good bet from a longer term horizon.
If you're looking for 6 months portfolio,
no, not 6 months.
I don't think it's going to make a lot of money. It's the other areas where you've got low valuations and then the companies are coming out from some problems. Those are the areas where you might get to make more money.
And would you ask people to book profits today, the retail investors, or no, just hold on?
So we don't advise the retail investors, so I will not get into that area.
The HNIs?
We don't advise that.
Okay, you're not advising anyone.
So I don't get into that area.
Actually. Sure. Sunil, my last question to you. What's the downside risk do you see for the AMCs? Because markets are at all-time high. We'll definitely ascribe good valuations, higher valuations to them. But what about, the times when the cycle changes, the tide turns, and you actually see even the FT rates going up? Do you see the shift in the money flowing from equity markets to the other avenues then?
Yeah, I'll answer your question in 3 parts. First, you talked about money trying to go away from equities. I'd like to tell you right now that within the financial assets, I talked about the move from physical to financial because of decreasing inflation. Within financial assets, right, India today is at 9% as equity AUM as a share of total financial assets. The rest of the world, Korea, China, US, UK are at excess of 30. Japan is slightly lower at 22%. So the room to grow for equities within the financial asset basket is phenomenal. So that's one. The second point that you made in terms of the markets being at all-time high, I'd like to gently point out here, 5 to 6 stocks are at all-time highs. The market, as in BSE 500, 490 stocks are nowhere near their highs. The market is sentimentally just taken a few stocks up and has, punished a lot of the general market because of a risk-off situation. So today's situation is actually an adverse situation from which it can only improve. And as opposed to saying markets are at all-time high, hence they're going to go down, I'm going to say that the flight to safety which has happened over the last few weeks and taking just a few stocks high is going to now realize that core India, see, the macroeconomic concerns from political as well as international matters are the ones which have hit the market. But the micro India, if you look at the earnings of the BSE 500 companies, they are consistently going at 20% plus CAGR. So I don't see any reason to be despondent about the markets. I believe that markets overall, I think the difference in markets is that I don't think about Sensex as a market. I think investors are invested with a broad range of stocks, a broad range of small cap, mid cap and large cap and sectoral funds. So I think looking at a BSE 500 perspective, I see that there's a very good inflation beating, fixed deposit beating, and all other asset classes beating potential with the equity mutual fund industry. And I think that that's going to play through in terms of whatever returns you're going to make by investing in financial services firms, asset management firms, wealth management firms, and the like.
So as HDFC is now at 1810 mark, let's see how much the top management officials their shares are worth now in HDFC AMC. Milind Barve's shares value is close to 212 crore rupees. Prashant Jain's share value is close to 168. Shobhit Mehrotra's share value is close to 67, while that of Chirag Setalwad's share value is close to 61 crore rupees. So that's what they are now. That's what their shares are valued at now, at close to 1800. And I remember KKR India also invested in this company at close to 1000 rupees, and now their share value is close to 1800 rupees, given the kind of traction that we are seeing for HDFC AMC. My last question to you, Santosh. Now, earlier there were a lot of market expectations that there is a huge operating leverage that will come in for this asset management companies, given the fact that the flows were increasing towards the mutual funds. But with the regulator cutting down on the total expense ratios, what will be the growth factors now for the asset management companies going forward?
See, as I was pointing out in the beginning also, that I don't see much operating leverage in the top 3 asset management companies, because if you just break down the total money which they make and the cost which they have, there's hardly anything. Maybe they can play with 2 to 3 basis points on admin cost, but there is not much left on the operating leverage side. At the same time, regulator had some problem with the rates, with the charge, so they have brought down the rates also. So clearly the growth driver is going to be the AUM growth rather than, and the mix of the AUM, rather than operating leverage or the cost side.
Okay, I think we'll thank our guest on that note. Santosh, thanks a lot for coming to our studios, and Sunil, thanks a lot for joining us today on this historic day, I would call it, for HDFC AMC listing and also markets touching all-time high. And clearly, it's been a bumper listing, clearly, investors who were allotted shares today are making good amount of money. But the question is, what next from here, considering the mutual fund market in India is under-penetrated compared to developed economies. So clearly, there is scope of compounding. But as Santosh was highlighting, whether the tide turns from here or not, we'll have to wait and watch. Well, 1822, 65% higher. We'll take a short break on that note. Don't go anywhere. On the other side, we address the futures and options market.